All right. Good morning, everybody. It's been a few hours since the last stream. Hopefully, everybody's enjoying their morning. Hopefully, you guys can hear me loud and clear. Uh, as you guys can tell, if you weren't on last night, I am sitting here in a hotel room. So please bear with me with the audio and all the technical difficulties that might come up here. But we're going to make this work. It's going to be great. It's going to be a great morning. I've got my coffee ready to go. I've got my backup coffee ready to go. So you guys know how I'm feeling. I'm exhausted. Got no sleep last night. But let me know where you guys are hailing from. Let me know how's it going with you guys. What are you looking for? What are your expectations for CPI this morning? We also got other news, which I don't know if you saw. I did because I was an insomniac last night and couldn't fall asleep. But Ark Invest will be releasing their Tesla new price target model, etc., later today. So go onto their website and sign up so you can get notified by it. But I'm sure you'll see it all on X as soon as it comes out. But that, just adds the excitement over the next 48 hours. So let's see. Ooh, calling from London. Whereabouts? My stepmother's from Bristol. I spent a lot of time in Southampton. Yeah, love England, UK in general. But yeah, what part of London are you hailing from? Let's see. What's up? Hi. Hey, Amy. See, morning from Kentucky. Nice, nice. All right. Listen, we're gonna have a good morning. It's gonna be a good CPI. We got about 14, about 11 minutes. And I better sip up on here. Riverview, Florida. Working in St. Pete. Oh, okay. We're close by. Yeah, nice. Nice. Yeah, we got people from all around. Okay, listen. What's going on today? Today we got CPI, Consumer Price Index. This is, everybody always says it's not the Fed's preferred measure for inflation. They prefer the PCE, yet for some reason CPI gets all of the glory, all of the fame, all of the attention. So I don't know if you would say that CPI is not their preferred or the one that they care about the most. So we'll see about that moving forward. I think if CPI is low enough, who knows what could happen today? It's I know this can sound crazy, but it is possible to get a rate cut today if we have a cooler than expected CPI. It's not expected. I think the expectation is 0.1. That would be good because that's showing that we're headed in the right direction, which is what the Fed wants to see. But today, the Fed's expected to do no change, just kind of remain at the current 5.5%. Uh, so right now, we're going to get the numbers here at 8:30, so in about 9 minutes from now. Then from there, we're going to we're going to get the decision by the Fed at 2 p.m. And that will be more interesting depending on how this 8:30 number comes out. Then 2:30 is when the market will start to go crazy because that's when Jerome Powell will be speaking, and we'll see how his language is structured. Is it more dovish, meaning bullish? Is it more hawkish, meaning bearish? So we'll see what happens from here. Berlin, Germany, nice. Southeast suburbs, 10 miles from London Bridge. Oh, nice. All right. Well, I hope everybody's having a good morning or a good afternoon. Um, this is going to be a crazy 48 hours. I've been excited for this. I've been excited for it, nervous for it. All kinds of emotions. It's early. Wasn't able to sleep last night. I'm here in Philadelphia. We'll be flying out in a few hours from now after I get done with some meetings. But Bristol, nice. But it's I got to rush home because tomorrow, as you guys all know, we've got the vote for Elon Musk, the official vote for his compensation for the reincorporation of Tesla from Delaware to Texas. We will be having another live stream. This will be a co-stream. It won't be as big as you've seen us do for the earnings call. This one's going to be Farzad, Hans, Matt, and myself. So keep an eye out for that. We're going to be covering the whole thing. We'll probably start 30 minutes before the event begins. Give our silly analysis of everything. You'll either see us cry in real time, or you'll see us celebrate in real time. And unfortunately, my mezcal, Tesla mezcal, I don't think will arrive in time. So that's unfortunate. I don't know if any of you guys got the Tesla mezcal, but when I saw that come up, there's no way I wasn't going to buy it. Uh, so pretty excited for that one. Let's see. Vote will be fine. Elon deserves. I agree. I'm really optimistic about it. I think things will go good. I think there are more people in support of it. I think it's in most people's financial interest to support it, so I'm not too worried about it. Southern Sweden. Oh, that's beautiful over there. Nice. Yeah, so we got a few minutes here. What we could do, what we could do is let me test the audio here. Make sure you guys can hear. So what I'm going to do is I'm going to unmute this. You guys let me know if you can hear these commercials.
He said, because I've switched to consumer cellular and now I get the same coverage he's.
Is that too loud? Let's see. This is going to be complicated. Okay. All right. So I played it there for a few seconds. You guys let me know if you could hear that or not. Let me also let me share something else real quick, just so that we're all on the same page. So let's see. So this is the CPI home. Let me make sure you guys can still see this. All right, let me make this a little bigger, just so you guys know what to expect. So here, again, hopefully, I don't have my monitor, so I'm kind of like going back and forth to make sure you guys can see this adequately. Okay, perfect. So this is the last, I guess, 13 months technically, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, April to April, obviously 13. So the number that we should be getting coming up should be this May one, right? Because we're in June, so we're looking for the May. So 0.1 would be good because that'd keep things in line and wouldn't show anything hotter. What will be interesting is to see, like if we come, where is it? If you come down here, yeah, here they'll break out like food and energy, and they'll talk about what they think like the major component was, or what was the major component to any of the CPI. Right? There's technical note, brief explanation, right? So they should give us some indication of what they see as the actual cause of inflation for this past month. And anyways, all that to try and tell you that what will be interesting is to see what they say about owner's equivalent rent. Owner's equivalent rent, for those of you who aren't as familiar, that is where they take people's houses that have mortgages, and what they do is they say, okay, well, if we were to rent this out, what would that look like? What could someone get for rent on that property where they have a mortgage? And if that goes up, right, even though your mortgage didn't change, that goes into owner's equivalent rent. And the thing about owner's equivalent rent and just rents in general is that makes up 25% of the CPI number. So it's pretty skewed, right? It's a very skewed number that may not be really reflective of what's happening in the economy. And this isn't just Nick's opinion. Okay. This is not just Nick's opinion. In fact, the majority of the Western world does not have owner's equivalent rent as part of their CPI. Right? So what happens if you were to take that one component out and you were to be reflective of what, pretty much the rest of the world does? Well, you would see that from a inflation perspective that we've been under 2% for almost a year now. I think it's like 9 months. So this is why it matters. This is why the Fed's kind of teeter-tottering on what to do. Historically, the Fed has stayed higher for longer, and they screwed up and they made a mistake, and we get sent into a recession. We hear recession, we think 2008, 2009, but that's not the reality of it. It's more, they tend to be more shallow recessions. But nevertheless, the point is that the Fed tends to cut too late. Now, this is why you actually want to see them cutting before we get to 2%. It's just like if you're approaching a stop sign, you'll want to start braking before you get to a stop sign, right? Because if not, you're probably going to overcorrect and go past that stop sign. So if 2% is the stop sign, well, you technically want to be slowing down as you go, as you approach that stop sign. And not to mention, as we get closer to 2% year over year on inflation, if we don't reduce that 5.5, that makes us even tighter, right? How does that work real quick? We got about a minute and a half here. So if we're at 5.5 and right now rates are or inflation's at 3%, we usually take that 5.5, subtract by 3, subtract the 3% that we are currently at, and that shows that we're restricted by 2.5%. All right. So if we drop down to 2 and we're still at 5.5, that shows you we're restricted by a whole extra 100 basis point or 3.5. So as we go down, we should actually be cutting rates to be equivalent restrictiveness. All right. I'm going to go ahead and mute this because I don't want to screw it up. Like I said, I don't have my monitors.
We are committed to delivering
So,
reliable, affordable internet and unlimited.
all right. You guys should hear that just fine. It should be muted right now, but I can still hear my ears, so we should be good. All right. Oh, we got some maniacs here. Nice. Nice. Maine, like that. Uh, appreciate. Glad you guys like my explanation this early in the morning. Guys, we're about to know. We're about to know what the whole week's gonna look like right now. Let's see how my lotto call options played out. Me and Xander went in on some lottos together. We talked about that last night. All right, here we go.
We are just moments away from the release of the May
Hopefully you guys
Consumer
can hear
Price
that.
Index. Want to
Let me know if you
introduce
need
our
it louder.
panel this morning. Wendy Edelberg is an economic studies senior fellow at the Brookings Institution. Veronique DeRougy is a senior research fellow at the Mercatus
I'm gonna
Center,
shut up.
and our very own Steve Leisman and Rick Santelli are
Let's make
back
this
as
bigger.
well. Right now, the futures ahead of this have been in the green, but just barely all morning. Dow futures up by about 25, the S&P up by 6.5, the Nasdaq up by 28. The expectations are for a headline number month over month up 0.1%, the core month
0.1
over
is
month
expectation.
0.3%.
Volume's
Headline
good.
for
Thank you,
year
Amy.
over year up 3.4%, and the core year over year up 3.5%. Ahead of this,
By
you
the
can
way,
see
Becky's
the
awesome.
Treasury market with the U.S. 10-year sitting just below
Ooh,
4.4%, 339. The 2-year is sitting at 483. All right, we want to get right over to Rick Santelli. He is going to have those numbers in just about 5 seconds.
5 seconds.
Rick.
Yes, we are awaiting our May read on the Consumer Price Index. And of course, this is expected to be a big deal for the Fed, which meets today, by the way, and it is hitting the wires. Unchanged on headline month over month CPI, unchanged. As was pointed out, we're expecting
That's
up
good. That's really good.
0.1%. Unchanged is the lowest level going all the way
That's
back
extremely
to
good.
May of 2020. So we'll call it 4 years when it was minus 1/10. We've had several reads that have been zero. If we look at ex-food and energy month over month, up 0.2. Also, as Becky pointed out, 1/10 lighter than expectations.
It's really good.
1/10 lighter than the rear view mirror, up 0.2. Last time we were at 0.2, well, it was October of last year. To find a lower number, up 1/10, you're going to August of 2021. Now the year over year numbers, 3.3 on year over year headline, 1/10 lighter than both expectations and the rear view mirror. 3.3 is the lightest going back to February when it was 3.2. We started the year at 3.1. And finally, ex-food and energy or core year over year, expected 3.5. Last look, 3.6, comes in at 3.4. 3.4 is the lightest level going back to, and this is a long way. We're going all the way back basically 3 years to April of 21 when it was 3.
Guys, this is extremely good. This is extremely bullish right now. This is exactly what we wanted.
There, by the way, it shot up so aggressively post-COVID. Now, Becky didn't give you expectations for the indices. I consider them maybe the most important. On headline, non-seasonally adjusted, the actual index, it moved up to 314.069, a new all-time high. If we look at the core index, which is seasonally adjusted, that moved to 318.14. Guess what? A new all-time high. Those indices have.
Okay. Let's let's just talk about this for 1 second. We'll listen to the panel when they come up in 1 second because they're just going to talk a little bit more here. But right now, Tesla's up $2, 1.22% just from this reaction. Right. So that's really interesting. And I'm sitting here. Yeah. Okay. Sorry, I was listening to him. So I'm sitting here reading the release. Let me actually. All right. God, I wish I had my monitors. I'm trying to do too much at once. Um, okay, let's listen to them first, hear what their reactions, and then what I'm gonna do is I'm gonna show you guys. Um, yeah, Steven, exactly. This is why I have those lottos. Exactly. Um, we're listening to the reaction. I'm gonna show you what they showed on the actual CPI headline report. So stand by for that. So let's listen here.
Guts. This erases that number and kind of evens the table again, the playing field.
Yes, I would think that's exactly right.
Wow. Okay, these are some really big moves. Let's get right over to Steve Leisman. He's been digging through these numbers too. And
Steve's pretty good. Not the biggest Steve fan, but he's good when it comes to the macro and the Fed.
Yeah, first topically, score one for the Doves here. We were trying to, it was kind of like
That's us.
a contest here between the disappointing first quarter and the great progress of last year on bringing down inflation. The question was, did the first quarter augur a beginning of a new higher inflation cycle? April and May together seem to suggest that was not the case. And this debate over whether or not it was renewed inflation or this issue of sort of beginning of the year price increases seems to be, or at least being settled now in terms of continued progress on inflation. Food was 0.1, energy minus 2% with a 3.6% decline in gasoline. New vehicles, a pretty big drop at minus 0.5. Used cars, however,
Tesla.
going the other way, up 0.6. That was interesting there. Surge in medical commodities up 1.3. And we did this number, importantly, without a whole lot of help from housing. Owner's equivalent rent still at 0.4, not reflecting any of the change at all.
What we're talking
that
about.
people think is happening, though I will point out Diana Olick, I guess it was yesterday, reporting a renewed increase in rents. But again, that motor vehicle insurance number, remember it surged 1.8%? This was thought to be kept from higher auto prices leading to higher insurance prices. Well, that was down 0.1, and airline fares, to renew an old debate between Joe and Andrew, down 3.6%. So there's a lot of, as Rick said, zeros and negatives in here. And you get the impression that what you saw in the beginning of this year, Becky, was beginning of the year one-time adjustments. This is not tremendous progress.
Okay. All right. So let me just mute this here. Let's talk about some of this. And let's start off by, you hear Steve Leisman there talking about the owner's equivalent rent that hasn't come through. So that's a very good point. Hopefully you guys can still hear me. I see people saying Starlink. Hopefully everything's good as far as the quality here. But let me, or you could stream on Vision Pro. All right. Hans, you're distracting me. No, I'm just kidding. Let's see. Stop screen share. And let me share this other thing I want to show you guys. Let's start off with this one. Okay. So right as that came out, you can see here, let me actually zoom in on this. Okay. So the PDF hasn't been released yet. So we can go through it. It actually might be out now, but this was what they wrote. In May, the consumer price index for all urban consumers was unchanged, seasonally adjusted, and rose 3.3% over the last 12 months. Not seasonally adjusted. The index for all items, less food and energy, increased 0.2. But what I thought was interesting was the news release headline: CPI for all items unchanged in May. Shelter up, right? So this goes back to what I was saying. This owner's equivalent rent is such a big deal. It is skewing everything to the wrong direction. All right. So we've got, that's so weird. The PDF's still not updated. Okay. Well, let's give us a few minutes, see if the PDF updates. Actually, let me just refresh. Let me refresh my screen. Maybe. All right. Now let's see if that does anything. No, and no. Okay. But sometimes it takes a little bit. it's been better as of late, where the PDF that breaks everything down shows up right away, but it's all good. So all right, so that was great. That was absolutely great news. Let's take a look at the markets here. Let's see what's happening with Tesla and everything else, um, because this is what we wanted, right? So the reason this is a big deal is because now we can go into tomorrow with more bullishness, right? We can go into tomorrow essentially on a high, and potentially we can ride that wave. Now that this, this is mutually exclusive from what happens tomorrow, but it's kind of a Goldilocks scenario, right? Can we get both? Can we get CPI inflation head the right way at the same time with Tesla? They've got the lower rates. We see that they're selling more vehicles, right? We have got 8.8, right? It's kind of like building the story and the narrative after we've been on this kind of stagnation for the last 3 years on the stock. So I'm extremely excited about this. I think this is going to be really, really good for tomorrow. As you can see here, Tesla's coming back down a little bit, right? But I think in general, you can see when the market opens, things are going to go up. Now, moving forward, what does this mean for today with the Fed? Okay, well, this probably means that there's not going to be a surprise cut, right? A surprise cut, if it was like negative 0.1, that could have led to a surprise cut. I do think, though, that this plus next month's CPI plus whatever we get from PCE, if we see this Gaza, Israel war situation, whatever you want to call it, resolve, you could see something happening because of all of that. And then you also have the bigger picture of the presidential election coming up. All of these things are factors or variables into the equation for the Fed. Whether they say it is or not, they try to say that they're agnostic when it comes to politics. Yet, by nature of not wanting to seem political, is almost political, right? I don't know how you guys feel about that, but it's almost like saying if you're to not do something is doing something, right? That by nature you're making the decision to not do something. By nature of that, you are doing something. Anyways, that's a little, I guess, philosophical, but I think this means that we're probably, as long as things continue, so we're probably going to get a rate cut over the next 2 meetings probably. So there's one in September, there's one in July. If that happens, you're going to see the stock market rip, and if it rips, we can just be in such a Goldilocks situation right now. Good, we could hear good things from the Fed, which they'll probably be a little hawkish just because this was a good report, and so they try to balance it out. And tomorrow we can get 2 yes votes. I think we'll get 2 yes votes. That's where I stand at the moment. I really think that people are going to vote for Elon because he's foolish not to, and I think that Tesla has drummed up enough support. And don't forget, with the move vote, Elon and Kimball can both vote, so their shares count. If you just think about them plus all of us, right, and we're the biggest block in reality, all of the board members, the ARK Invest, the Ron Barons, the whoever else is a big fund that supports Elon and Tesla, I think that they're all going to vote, and I think we should be able to get to where we need to get to. So you take that, 2 potential yeses there. Let's say delivery numbers on July 2nd are a little maybe better than we expect. I think there's a lot of doomsday out there right now. We get into 8.8. 8.8 is actually pretty exciting right now because everybody that you listen to, they're kind of really downplaying 8.8. They're kind of acting like it's a nothing burger. They think, okay, Elon's just gonna show a cop car and an app, and that's it. I'll be frank. I've been on the more optimistic side of these things in the past. I admit it. I have been. But with that said, I also think that I think that if that's all they did, it'd be a little bit like, what's the point? Right? What's the point of showing us robotaxi, but then not telling us about it, like how it's going to work. When can we use it? How can we use it? How is this whole okay? So if you're going to talk about an app, okay, well, who can add to it? When can we add to it? Right? I feel like there's going to be details around it. If not, what's the point of talking about it at this point? I don't know. And I also think that we'll see some of the other vehicle models that they're going to be building, and I think those will come out before the robo taxi. But anyways, I'm getting off track here. So 8.8, I think will be bullish. I think FSD is going to continue to progress. So it feels like we might finally be getting out of this, I don't know, this crappy 3-year period that we've just been boxed into, right? That constant downward slide. But it could be for 5 years. You never know. Now, what was I going to say? Oh, the other big thing that's part of all of this is that okay, let me share this. All right, Rod, be ready for A8, not a service launch, just a description. I kind of agree with this. I don't think that on 8.8 they launch the service and say, "Oh, you can go hail your robo taxi, whatever." I do think that they will tell us when the service would launch, right? I think it'd be weird not to say like, "Hey, end of the year, first quarter 2025, by the end of 2025, first quarter 2026, something," right? I feel like they would tell us something, give us some type of window, and I think that would be fair. So I agree. I don't think on 8.8 we will have a service launch, but I'm hoping that they will give enough so that Wall Street can try to model this out. And if they give enough for Wall Street to model this out, I will be able to model this out. So selfishly, it's just for me. Um, anyways, so the other big news is last night, ARK Invest said that they are going to be releasing their new updated Tesla price target models, etc. So that's coming out today, right? So I haven't looked on X. Maybe it's out already, and I'm just not aware of it. Let's see. Let's see. Elon just okay. Apparently, Elon wants a teleportation machine. It's funny that he actually said that because he was asked in an interview recently if that if he could go back in time, what would he do? And he said he wouldn't because he wouldn't want to change anything because you never know the ripple effects. All right, I'm not seeing anything crazy. Oh, that's an interesting fact. Omar posted, so far this year, Waymo has been adding about 57 cars a month to their driverless fleet. Man, let's see. What's Tesla adding? About 100,000? 200,000? Core CPI was well below expectations. This is Nick Timmeros. Core CPI was well below expectations in May, posting a 0.16 gain. The 3.4 increase from a year earlier was the lowest in 3 years. 6-month annualized rate is 3.8 versus 4.1 in April. 3-month annualized rate is 3.3 versus 4.1. All right. So we're still in the threes, but okay. All right. Waymo currently, okay. Breaking CPI comes in at 3.3 versus actually, okay. All right. So nothing crazy, nothing really breaking news there. Let's just take a look to see if this PDF is updated yet. Because that's really what I'm holding out for. Nope, I'm still not seeing it updated. That's a shame. Let me make sure I'm not screwing up here. No, I don't think it's me. Oh, here we go. Okay. Let's see. All right, let me share my screen. Let me find the right screen to share. And then we will look at this. And then we'll wrap up. Share screen. Let's find the right one. Is this it? Yeah, I think this is it. All right. Let me make sure you guys can see this okay. All right. Actually, would it be better if I do this? Yeah. Can I move me? All right. I'll try to be cognizant of where I'm at. All right. Again, keep in mind on my monitor, so I'm not really sure how this is going to come across. Right. Hopefully you can read that a little better. Okay. Let's see. The consumer price index for all urban consumers was unchanged in May. Let's use the adjusted basis after rising 0.3% in April. Over the last 12 months, the all items index increased. Okay. More than offsetting a decline in gasoline, the index for shelter, look at that. The index for shelter rose by 0.4% for the fourth consecutive month. Right? This is an anomaly. And remember, this is 25% of the index. The index for food increased 0.1% in May. That's great. The food away from home index rose 0.4% over the month, while the food at home index was unchanged. The energy index fell 2% over the month, led by 3.6% decrease in gasoline index. The index for all items, less food and energy, rose 0.2. So I wish they would do minus. Course. Okay. Indexes which increase in May include shelter, medical care, used cars and trucks, and education. Again, this right here, this freaking shelter, this is our problem. The indexes for airline fares, new vehicles, communication, recreation, apparel were among those that decreased over the month. All right. So let me see what this looks like over here. Okay. So let me zoom out. Hopefully you guys can see that okay. Sorry if that's small. Is what it is. All right. Let's see. Food, 0. Food at home, 0.1. Okay. Let's see what the biggest one. Energy, -2. We were definitely expecting that. That's not really a surprise. Let me mute. All right. Let's go back here. Let's see what else we got here. What's it? -0.36. Oh, that's gasoline. Energy, all items, energy, shelter. This is all to see. Shelter, 0.4. Transportation service, okay. So 0.4. So unadjusted, 12-month ended in May 2024. It's saying that shelter is up 5.4% right here. This number right here, 5.4% over the last 12 months. Now, this seems just highly off basis, in my opinion. And I think the Fed knows that. That's why the Fed's keeping a close eye on it. Let's see if there's anything else interesting here. That's not interesting. Any other comments? There will be the news release. Okay. All right. Well, we got what we wanted. Essentially, just confirmation of what was happening there. With regards to shelter inflation. So that's really where it's all coming from, right? You take that out, we are well below 2% at this point. In my opinion, the Fed knows this. They're aware of this. We have unemployment now up at 4%, right? The Fed's been getting us ready for a rate cut. Let me walk you through this. 1, they paused. 2, they talked about doing 3, 4, 5 rate cuts this year. Then things got a little hotter in the first quarter, but now we know that hotness came from seasonally adjusting for new metrics, and again just seasonally adjusted, right, going from 2023 to 2024. So we've explained that away at this point. We can see that energy's coming down. OPEC's about to start putting more oil out on the market. So that's going to continue to be deflationary, or it's going to slow down inflation. Then we start to have Jerome Powell talk about holding. Then he started talking about how, well, if unemployment were to tick up, then we would probably, think more about our dual mandate. You've heard him start talking about this dual mandate, saying that they're coming more into balance. I mean, the inflation part of the mandate is not as big of a target as it was before. Now, as unemployment ticks up, that's also in the playing cards. So as we start to see this balance come through, and they are not stupid, they are aware of what's going on with shelter. So they know to strip that out. They know keeping rates high isn't going to fix that. They know that no matter what they do by keeping rates up, it's not going to fix the supply on the market. It's not going to happen. So this is a pretty big deal. And in fact, it's kind of counterintuitive, but if they could drop the rates, there's a chance supply would come online, right? Because people, the big thing is like if you're someone like me, all right, I have my house, right? I have a say 2.8% interest rate. I'm not going to sell that to go into a 7.1% interest rate. There's no way. It makes zero sense. I would get less house than what I have now. I would essentially be downgrading. Yet, let's say that rates came down, on a 30-year mortgage, 20% down, good credit, all that comes down where you can get 4.5%. Well, now going from 2.8 to 4.5, it's not really that big of a stretch. It is what it is. I obviously am interested in something else, so maybe I make that move. But in general, people have rates anywhere. The majority of people have rates from like I would say 4 or 5 down to 2.8, and that's where the majority are. So if you could bring 30-year rates down on a mortgage to the point where people don't feel like it's unjustified, that could bring supply on, right? So we're at an imbalance there. Keeping rates high will not fix that. Anyway, so Jerome Powell has been signaling this talk about this his dual mandate coming back into balance. Now, by coming back into the balance, again, he's been hinting at us that if we were to see a drastic uptick, he even mentioned the 4% number for unemployment, then we might, we will need to be data dependent. We might need to react. And so this will be the first meeting since we got that 4% rate, or 4% rate for the unemployment. All right. So keep an eye out today. 2 p.m. We're gonna get their decision. It's probably gonna be a no rate cut, almost guaranteed. But I would keep an eye out for 2:30 when he speaks. Listen closely for the balance of our dual mandate. Listen closely for questions about owner's equivalent rent, right? That's because that's the biggest part of the CPI right now. That's the only reason we're above 2%. People will ask questions about that, guaranteed. And then listen for him to talk about the balance of the dual mandate and how he's thinking about unemployment. That's going to signal a lot. So we're at a point where the people asking questions can be very pointed to get what we're actually trying to understand about where they're going. And I think that the Fed is going to try to be very clear in the signal to us on what's next. All right. So let's see. Oh, breaking news. Right as I was about to come out, ARK Invest report out. Hans, breaking the news. Our correspondent Hans, $2,600 per share in 2029. Yikes. Okay, so that's essentially $400 a share shy of a $10 trillion market cap, if I'm correct in my math there. So what's that come out to, guys? Help me out. Is that $8 trillion market cap? That would definitely make Tesla the biggest company in the world for right now. But yeah, highly recommend everybody go out and check out this report. It's, if I didn't have a meeting, this is what I would be doing right now. I'd be diving into this, but Hans, thank you for bringing us that report. Listen, this is great news, right? We're starting off this 48 hours the right way. All right, we're gonna leave it there, guys. Don't forget tomorrow for the shareholder meeting, Hans, Farzad, me, Matt, we're gonna be having a live stream. We'll be covering it. We'll be on 30 minutes before the meeting starts. It's gonna be fun. Bring your drinks, bring the good vibes, and we're gonna go and we're gonna kick some ass and get 2 yes votes. All right. I love you all. Thanks for tuning in. YouTube stuff, like, subscribe, all that stuff if you want. Talk to you later. Enjoy the rest of your day. And yeah, see you tomorrow. Peace.